Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from United Natural Foods, or UNFI. It looks like they are rearranging how they present their sales numbers. It may sound boring, but this change might reveal something important about how they are performing and where they see growth coming from. So UNFI, a major distributor of natural and organic foods, is changing how it reports its revenue or how much money they bring in from sales. Starting in the second quarter of 2025, they're going to break down their sales into three categories: natural, conventional, and retail. Previously, they might have grouped things differently, but this new approach gives us more clarity on where their money comes from. To help investors and analysts understand this change, UNFI has also put a presentation on their website. This presentation shows what their sales numbers would have looked like in the past, from 2022 through the first quarter of 2025, if they had used this new natural, conventional, and retail breakdown all along. This allows for an apples-to-apples comparison, making it easier to spot trends and see how each category is performing. Before we dive deeper into that new sales data, it's worth noting that UNFI is a publicly traded company, meaning you can buy and sell shares of their stock on the New York Stock Exchange. Their stock trades under the ticker symbol UNFI. Understanding this allows you to follow their stock performance as we analyze their business. This report was signed by Giorgio Matteo Tarditi, the President and Chief Financial Officer of UNFI. This signature confirms that he believes the information in the report is accurate and complete. It's a standard procedure, but it's important because it holds the company accountable for what they disclose to investors. Now let's break down what these new sales categories actually mean. Natural likely refers to organic and natural food products, which is UNFI's historical strength. Conventional probably includes more mainstream food items that you would find in any grocery store. Retail likely represents sales from stores that UNFI owns or operates themselves. This shift in reporting suggests UNFI is trying to give investors a clearer picture of its business segments. They might see different growth rates or profit margins in these different categories. By recasting their revenue numbers, UNFI is giving everyone a chance to see how each of these categories have performed over the past few years. This helps analysts and investors understand the trends. Is the natural category still growing as fast as it used to? Is the conventional category becoming a larger part of the business? Is retail expanding or contracting? These are the questions that this new reporting structure will help answer. The company's previous name or address is not applicable or has not changed, so there is nothing interesting to note here. So what does this all mean? Well, UNFI is clearly trying to be more transparent with investors. This new reporting structure will give analysts and investors a more detailed view of their sales performance. By breaking down revenue into natural, conventional, and retail categories, UNFI is signaling that they understand the importance of showing where their growth is coming from. Now, it's up to the analysts and investors to dig into those recast numbers and figure out what they mean for the future of UNFI. Is the company successfully diversifying its business beyond just natural and organic foods? Is their retail strategy paying off? The answers to these questions will determine whether UNFI continues to be a successful player in the food distribution industry. This change in reporting also hints at the evolving landscape of the grocery industry. Consumers are increasingly demanding healthier and more sustainable food options, but they also want convenience and affordability. UNFI's ability to cater to both the natural and conventional markets will be key to their long-term success. Finally, this type of change in reporting shows that the company is attempting to adapt to an evolving landscape. Many companies face issues from competitors, changing consumer tastes, and overall economic trends. This can be a sign that the company is forward-thinking and proactive in its business strategy. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more Corporate Decoder content. Let us know in the comments what company you want us to decode next.